if you got it when it is that you were making the payment into the scheme, then you know that when you get it back as a benefit from the pension scheme upon retirement or upon drawing out the money when you change jobs to buy a taxi, right? Okay, that's my next move, you know. Right? Then you know you're going to have to pay tax on it after you take out the tax-free lump sum. So you do get a lump sum tax-free, and then you pay tax on the difference. Because if you got it tax-free to put it in, when it comes out, you pay tax on it. But the revenue has not been bad because you get some special benefits. Everybody here knows that the threshold, the income tax threshold, has moved for 441,168. Now, a person who is aged 55 years and over, but is in receipt of a pension, me for instance, I came out and I'm in receipt of a pension, right? I am eligible to another $80,000 each year on which I will pay no tax, just because I am in a pension scheme and receiving a pension. When I reach 65, haven't gotten there yet, thank God, right? And then I will be entitled to age relief, another 80,000. And it is in November last year that these two amounts moved from 45,000 to 80,000. So when we look there, we see the threshold is 441,168. The pension relief is 80. The age relief is 80. So you get 601,168 once you are age 55 receiving a pension, and age 55 receiving a pension, and age 65 for age relief. We would have hoped that that would have gone up to $1 million, but guess what? We will get there, right? Because I'm urging the Minister of Finance to index these amounts to inflation, right? I am really urging him to do this. Okay. Now, Mrs. Hennes is there to protect beneficiaries, etc., and we'll skip those, right? Now, let's go to an IRA. An IRA prior to 2008, if you're self-employed, all you were allowed for tax purposes is the measly amount of $6,000 towards any kind of pension arrangement. $6,000. Now, really, you can't buy a good pair of shoes, the type I like, right? In any currency, that is, right? So therefore, people just paid it no mind, and therefore, the retirement schemes just fell apart, nobody was interested, etc. And as a result of that, self-employed persons were not inspired or encouraged because there were no tax benefits. Why would I bother? As Doctor said, he earned his money, he spent it, and what little left over, he put in the Bank of Nova Scotia. Luckily, he didn't go on regulated scheme, or I'm not sure. Maybe he just doesn't want to say. Right? You understand? So in reality, up to 2008, self-employed persons or persons in a scheme could not participate at all in a retirement scheme. It didn't make sense. I went on to say that the task force from 1986 had made these recommendations, but they were just not taken on at all. Now, how is it when I join a retirement scheme, and I just give you what you need, etc., but what is it that you get the benefit of? It's 20% of chargeable income. Chargeable income, right? So, let us take Mrs. Hennessy's example of John, right? Suppose John works with somebody without a pension scheme, but John is also a consultant doing consulting work. So John takes his salary plus all his other income, computes his income chart, takes off his expenses, and whatever is his income that is chargeable to tax. That's what chargeable income means, right? Whatever you would pay tax on, 20% of it is relieved from taxation. So if I make $5 million and $5 million is subject to tax, right? Then 20% of that amount, which is what? $1 million. I can take off, put it in Scotia Bridge or any other. I always say, I don't run past the Bank of Nova Scotia, but maybe I shouldn't say that so loudly here. But $1 million can be contributed to an independent retirement scheme. $1 million. You don't have to get permission from the income tax department, now the taxpayer audit. All you have to do is to sign up with an approved provider of the schemes and make the deduction, whether monthly, annually, etc. But one of the things you must be prepared is you should have done an income tax return. You should have done it to prove that the 20% is 20% of chargeable income. I'm going to send to Anya a template that I've recently done for farmers, right, of an income statement and a tax computation, right, so that she can use it to give to her clients and say, this is what you do. It's a formula. It's something I'm just about finishing developing for self-employed persons, right? A formula, income and expenditure account, how you then transfer that to an income tax computation, what other deductions, and whatever is chargeable income, that is the 20% of that you must and should take and put into an IRA, individual retirement account. Ladies and gentlemen, we must encourage persons who are not on pension schemes, right, and self-employed persons to go this route to secure their future based either when they retire or upon incapacity that you cannot work anymore. The tax benefits are there. Take advantage of them. The $80,000 when you reach 55, the $80,000 when you reach age relief, and the 20% tax-free. 20%. Moving from $6,000 to 20%. It's $6,000 versus the John example of $1 million. That is a significant leap that the government has made in favor of. And don't think they've done it for themselves, Guess what? Superannuation funds are a major form of investment opportunity for any country. So